Traders, after an intense week, after a hectic week last week, and the markets were returning to really more of a familiar outline for the watch list this week. Now, my approach last week was obviously very well suited for the environment, and coming into Monday, it was very well suited for a high volatility environment marked by fear, uncertainty, and obviously major headline risk, which we saw play out extremely well throughout the week, and major opportunity in some of them leading index ETFs. And while volatility and uncertainty is obviously still elevated, volatility might begin to calm down a little bit and subside thanks to the major headline on Friday late evening, the tariff exemptions that came out. Now, the exemptions obviously favor mostly and benefit mostly, tech sector, computers, consumer tech, and some semiconductor companies. I mean, it's very likely going to trigger a significant gap up. We'll see that when futures open on Sunday evening, especially NASDAQ. Now, that said, anything can still happen for the upcoming week, but I'm really just basing my plans around the relative strength we saw in a couple names on Friday, and then obviously the news that came out Friday night. There's definitely a bit of a sentiment and narrative shift. So here are my plans that mostly revolve around the news on Friday night. I'm going to be focusing on two names. For me, that's going to be Apple and NVIDIA, along with some other plans that I drop at the end of this week's watch list, so stick around. Now, Apple and NVIDIA obviously showed some impressive relative strength on Friday, and of course they positively impacted by the exemptions and the headline that came out Friday evening. So the first plan is going to be a gap, give, and go in Apple. Unfortunately, the headline came out while the market was closed, as you know, and myself and many other traders were game planning and prepping for this exemption headline, a repeat of what we saw in 2018, and would have been very quick to react to it intraday. But obviously now that breaking news opportunity intraday is gone, the plans have changed. So instead, while the stock is probably going to gap up significantly, it's anyone's guess, 5 to 7% on Monday, I'm going to be looking for a potential higher low, a potential gap give and go setup in order to go long for some follow through intraday. Now, obviously, we have 200 as a major area of resistance in the previous couple of weeks. And so typically I'd want to see a gap above, a pullback, and resistance turn into newfound support, but I just find it very hard to believe that we retest 200 on Monday. So in that event, I'm sort of more open to a gap towards 208, previous pivot low, coming into the 20-day moving average. If we have a gap above this area and pull back into 208, 209-ish, also the gap down from Liberation Day 1, that would be an area of interest to me. But I'm also on the higher end, also open to a potential gap closer to 215 to 220 if things were to get a little bit crazy and we got some short covering early in the morning. But the opportunity to go long for me is only if the stock gives up some of its gap early on in the pre-market or off the open before confirming a higher low and stabilizing above its intraday volume weighted average price. That would be the key for me. If we do get a gap higher into any of those areas of potential supply or notable areas previously on higher time frames, if we give some of that gap back early in the pre-market or off the open, and then that's followed by a reclaim of its VWAP intraday following a higher low, an area to base my risk off of, that would be the setup that I look for intraday in order to go long, all right, for some continuation higher. Very similar is the plan in NVIDIA, with the stock obviously set to gap up higher on Monday. I'm not looking to chase strength early on in NVIDIA or Apple. I'm not looking to chase strength at all in the index ETFs. The skewed opportunity risk reward will only be present with high EV if they continue to display relative strength after a morning flush, whether that flush takes place in the pre-market or off the open. I need to see relative strength then follow that in order to have this bias. So if NVIDIA, after gapping up a few percent, if we gap up into the sort of 115 to 120 region, and if we get a pullback off the open and it confirms a higher low along with relative strength following that to the market and its sector, that's when I'd be looking to get long versus the previous higher low on a 5-minute chart, or low of day, or continuation higher. So specifically in both cases, I want to see a reclaim of VWAP intraday, failure to then get and dip back below and hold below VWAP, because that might confirm that there's some major buying interest, some institutional buying that could form a significant intraday uptrend. Now, in both cases, like I've mentioned already, I'm going to be looking to trail my stop intraday against a hold above VWAP and 5-minute higher lows. And then conversely, completely different buys that might form is if that gap fails to follow through in the morning, and if the overall market holds weak underneath intraday VWAP, underneath pre-market support areas. In that case, if following a major gap higher, an outlier gap higher, I'd be interested and open and nimble to potential short scalps intraday. If it might prove to set up as a potential sell the news opportunity that may have offered some exit liquidity. So while unlikely, like I said, it's a small possibility, and I remain open to that possibility if the gap is incredibly significant and a bit of an outlier. So some additional thoughts and ideas along with the overall idea following the exemption headline. Other ways of expressing that idea could, of course, be in Qs. And I'd also look to potentially express that idea in SOXL, 3x semiconductor bull instrument. Then, barring any major, sort of sweeping negative headlines or developments for the economy, for the market that result in significantly increased fear and uncertainty, I'll also be keeping VXX volatility on the radar for potential disconnect to the market, for a potential short opportunity to see some of that decay come out as fear perhaps subsides a little bit. So if the market continues, if SPY overall market continues to base above its 5-day moving average, put in a higher low, we get a couple strong closes, we get some stretched strength intraday. I might be looking for some reactive shorts in VIX as long as we hold weak underneath VWAP and look for lower highs as entry and extensions below VWAP intraday to be taking some risk off and trailing my stop on the 5-minute time frame lower highs. So VIX there would be the go-to for some decay. And then lastly, I'm also going to be keeping a very close eye on gold, GLD, as well as gold miners ETF, GDX. Gold for simply just some failed follow through for a short opportunity after its historic run high. If we do see some deals announced with some major trade partners with the US, if we see some deals announced this week, if we see bonds stabilize, if we see equities firm up, I think we could see a little bit of error, a little bit of profit taking in gold and in the miners. In gold, for example, I'm specifically looking for either a first red day setup after already seeing 3 consecutive gaps in GLD, or I'm looking for a 4th consecutive gap higher, and then a failed follow-through setup where we look to retest pre-market highs, where we look to retest a morning high, we fail to follow through, and we break below VWAP, consolidate, and take out the low of day for a potential failed follow-through setup for a short and potentially a multi-day swing. So coming into the week, that's everything I have on my watch list. Obviously, in the environment that we're in, still with some uncertainty and fear, obviously at elevated levels. This can all change if we get significant headlines or any interesting developments. It can change on a day-to-day basis. So just coming into the week, early on in the week, these are my plans and thoughts right now, subject to major change, because it's very important to be nimble and flexible in this environment. So let me know your thoughts and plans. Drop it in the comments below. As always, I enjoy reading through those comments and your plans and thoughts. And I'm wishing you all a good week, good luck, and I'll see you all next week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.